Earlier this week, the Indian rupee hit an all-time low as major currencies continue to crack against the dollar, tracking losses in both domestic and global equity markets. Rupee movement has a very high correlation with stock price movement here in India. Now, this is explained by the fact that foreign institutional investors or FIIs are the largest group of investors in the Indian stock market, and their buying and selling has a big influence on the domestic stock prices. FII investment in India may lead to rupee appreciation with several other currencies, and their selling and disinvestment may lead to its depreciation. Before we tell you how, do subscribe to the Money Control YouTube channel and like and share the video once you've seen it. FIIs tend to track rupee movement closely as the returns they make on their Indian holdings can be significantly affected by currency movements. Here's the logic. FIIs have to buy shares in the local currency. So they bring in the dollars, convert them to rupees and then buy the shares. Say the rupee is at 60 to the dollar. If they want to buy a stock that costs 120 rupees, they shell out $2. Now let's assume the stock price remains static but the rupee weakens to 75 against the dollar. If the FII wants to take his money out, he will now get only $1.6 on his original investment of $2. Do FIIs factor in rupee depreciation when investing in an emerging market like India? Yes, they do. But if the weakness is beyond what they expected, they start cashing out. But won't a weak rupee mean that FIIs can buy more stocks for the same amount in dollar? In theory, yes. But when a country's currency is under pressure, the stock market usually takes a beating. So even if the FIIs can buy more shares, it doesn't make sense if the value of those shares continues to fall. And if the rupee weakens further, the FIIs will be hit by a double whammy, by a decline in the share price as well as getting fewer dollars if they decide to pull out. Typically, FII outflow rises when the rupee depreciates because the currency of a country is a key indicator of the state of its economy. But this time it's different. The Indian economy is actually quite resilient. In fact, it's outperforming its peers. It's the sharp spike in dollar that's actually ailing the emerging market currencies. But having said that, the FII would still be wary of staying invested in a country like India or any other emerging market at a time like this because they will in the end lose money on their investment, no matter why the currency falls. Hope you now get a sense of the correlation between the FII selling and currency depreciation. Thank you for watching.
It's rare to find news and insights tailor-made for you. For clutter-free content and value-added insights, India's #1 financial news destination, Money Control brings you Money Control Pro, an ad-free premium service that offers its subscribers curated market data, feasible investment solutions, exclusive noise-free information, independent equity analysis, and sharp opinion. Money Control Pro, India's fastest growing subscription service, has offered valuable content to subscribers in sync with their interests and demands. We are now a family of over 500,000 active subscribers, consistently helping our users on their wealth creation journey and enriching their awareness around business and finance. We are grateful for the continued support of our loyal readers and subscribers for making Money Control Pro an undisputed leader in its category. And if you are yet to experience the rich offerings, subscribe today for a seamless, uninterrupted access to a gamut of business and financial information. Be a pro with Money Control Pro.